Stocks recover sharply after an early intraday dip. Financials, auto as well as IT lead, while healthcare and real estate sulk. Mid-caps underperformed today.
Adani Group, which will infuse 20,000 crore rupees into Ambuja Cements after it took over Ambuja Cements and ACC, has set itself a target of becoming the largest and most efficient cement player in India by 2030.
Mahindra & Mahindra gains on its plans to sell 30% in renewables arm Mahindra Sustain to Ontario teachers with a plan to offload another 9.99% by May next year. Now, the move will aid the group's green energy push and value creation.
Cipla sulks after US FDA makes 3 repeat observations on its Goa unit. HDFC Life gains on receiving the NCLT nod to merge with Exide Life Insurance, and ONGC perks up after the government cuts the windfall tax rate.
Hello and welcome. You have tuned into Business Lunch. I'm Nisha Podar, and with me, as always, is my co-anchor Pavitra Parekh. So, Pavitra, good day for markets at the moment. So, yes, we started on a flattish to mixed note today, but then look at the kind of recovery that the market has seen. And in the last 1 hour, after really jumping back from a minor dip, definitely the market is looking like it's stable in a very tight range. However, I would say that 50 points below the high point of the day at the moment, but 17,600 level conquered and stable at this point. When we really look at Sensex Nifty, both from 0.5%, there is a slight bit of dip which is being seen, and so is the case in Bank Nifty as well, now 0.45% up in trade. And the mid caps are the ones which are underperforming today, flattish in trade, but still giving a green tick. However, advanced decline ratio in favor of the declines marginally, so not a really bad day when it comes to the market strength, even though mid caps are on the flattish line. But some of the counters from some of the group companies like Bajaj Twins, SBI Twins, SBI State Bank of India being a very big heavyweight, along with HDFC Twins, these are really performing well and giving a lot of momentum to the markets today, Pavitra.
Oh, absolutely. Momentum is definitely on the upside. In fact, as we speak in the past few minutes, the mid-cap index has also moved back into the green, right? If you take a look at Nifty from the day's low, it's an over 180-point recovery that we've seen. It is clearly the financials, like Nisha was pointing out. If you take a look at the IT stocks, today they're holding up. But remember, last week we saw a 7% cut on the Nifty IT index. So this is going to be an interesting space to watch. Remember, on 22nd, you have Accenture, which will release its earnings. But more importantly, they'll release guidance, right? So that's something that we're watching out for with respect to the entire IT pack. Of course, cement is cementing gains further. So that one is looking good. And all eyes are on the FOMC meet. We will have that result out on Wednesday as well. So that is the big global cue to track. But that's what's going on with the market. We're going to keep coming back to this. First up, the cement space is in focus today. Like we told you, this is the Street Cheers Ambuja Cements fundraising plans. Ultratech feels the heat as Gautam Adani aims to be the biggest cement player by 2030, while Nuvoco and India Cements are gaining on hopes of possible consolidation in the sector. Nigel is here to bring us up to speed on all of that. Nigel.
Well, clearly the street is reading this positively, that the promoter entity is putting in big money into Ambuja Cements, and that's why in fact the street is pretty happy, and that's why they're bidding up the stock. The total money that will come in post-warrant conversion will be nearly around 20,000 crores odd, and the promoter holding will go up to more than 70% in comparison to around 63% odd. The big statement that came in from Mr. Gautam Adani, he says that the company will be the largest and the most efficient cement company by 2030 odd. Remember, as of now, UltraTech Cement, that's the big daddy, and then they've already laid out a roadmap where their total capacity will go to around 155 million tons by 2025 itself. That's why UltraTech Cement, a relative underperformer, while on hopes of consolidation, the street bid up a couple of other names, like India Cements as well as Nuvoco. What are brokerages making of this? Goldman Sachs, they have a neutral rating on Ambuja Cements with target price of around 380 rupees post the recent run that they've seen. They are saying, assuming this 20,000 crores is implemented for capacity expansion, there could be a potential value upside of close to around 23 to around 47%. And they've given some scenario analysis as well that comes up for you on the screen, depending at what level and what valuation they do acquire assets, whether it's $80 per ton, $100 per ton, or around $120 per ton. And that could give some potential upside. Investec, well, they reiterate that Ambuja is their preferred play, despite higher valuations in comparison to ACC. So they've increased their target price, the highest on the street, at around 752 rupees per share. On ACC, they have downgraded it, in fact, to hold with a target price of around 2,900 rupees. The rationale they give is that Ambuja Cements is likely to be the key vehicle for Adani's cement foray. Also, they see some synergy, optionality, as well as higher growth prospects in comparison to ACC. And at some point of time, they say maybe there could be a potential merger as well. Finally, Jeffries, they have a buy rating. They have upped the target price big time on Ambuja Cements, while they have increased it to around 620 rupees odd. They've increased their EBITDA estimates by nearly around 20 to around 30% for the next few fiscals, factoring in higher volumes, factoring in higher EBITDA per ton, and they're saying synergy benefits will start flowing in post-December 2022. All this explains why the stocks were in focus. Back to you.
All right. Thanks so much, Nigel, for giving us the entire industry scenario when it comes to the cement sector. But very big turning point has been the shake-up that is created by Adani's entry into this particular sector. So lots of action at play, and also infrastructure requires cement. Moving on then, Escorts, that stock is up at fresh 52-week high. Right now, 9% up in trade today. Sonia Shenoy is right here with the key management takeaways from the conversation we had with them earlier today. And what is it that Street is really betting on, Sonia?
So, a couple of days ago, Escorts announced that they will be amalgamating two of their JV companies in order to come out with a simplified organizational structure. Now, today they told us that this amalgamated JV, which is currently loss-making, will become profitable by FY24. So, firm guidelines, a firm timeline given on when the amalgamated JV will become profitable. They will also come out with a midterm business plan by November of this year. But the big trigger for the company now is that they will undertake localization of engine production in India, and that will happen over a period of 2 years. And as that happens, the efficiency of the company will improve. They will bring down their costs significantly. The costs will go down by 25 to 30%, and that's a big amount over the next 2 years, which will help them eventually in terms of better margin performance and better profitability. That is something that the Street is reacting to. Not just that, the company is very confident that September to October will be a bumper month for the tractor industry. They also speak about how the tractor industry will see a high single-digit growth, and also about how the sentiment has definitely improved. And post the amalgamation of the JV, now that Kubota has over 53% stake, the export volumes for Escorts Kubota will also go up. Hence, the stock is sitting at a fresh 52-week high as we speak, up about 9%.
All right, Sonia, thanks a lot for taking us through all of those details. But also stay on, because one of the top gainers on the Nifty today is M&M. This after it sold 30% stake in its renewable energy arm. In fact, brokerage house CLSA has now also given a bullish call on the stock. So tell us more about this as well.
M&M in the year 2020 had come out with a plan, firm plan, where they are looking to sell stakes in their non-core business, right? So they're exiting a lot of their legacy businesses. They are monetizing their stakes there, and they did that today as well. They sold 30% stake in the renewable energy arm for 17 crores. Now, what they plan to do here is they will set up an InvIT to list the renewable energy assets, and they will deploy the funds that they've gained through the stake sale in the same business, in InvIT as well as in the renewable energy business. They're looking to build a strong renewable energy business. They currently have a capacity of 1.4 gigawatts. Now, all of this is done in order to unlock value for shareholders, something that they had suggested that they would do in 2020, and now the plan is in action. Not just that, the core business is doing exceptionally well, as we know. CLSA put out a note where they have a very aggressive target price of 1567. They maintain a buy. The title of the note is M&M is going through a golden period right now. Also, the fall in raw material costs will make sure that the margins improve, and the full impact of that will be felt Q3 onwards. They have very strong bookings of over 240,000 units for their new SUVs, and they have multiple new SUVs planned over the next 12 months, whether it's the 5-door Thar, the new XUV 300, and the Bolero Refresh. But I think what the Street is latching on to is the fact that M&M is cleaning up its old legacy businesses and focusing purely on the core business. That's something that Ramdev Agarwal of Motilal Oswal also told us a while ago. Listen into what he had to say.
The company is very in a determined way that they are cleaning up all the portfolios of the legacy businesses and building up on the EV cycle. So it looks very exciting, and the current CEO is completely on top of it. So it's they're not able to produce enough to meet the market demand. This is what the market looks for. 25, 30, 40% growth at least in next 4-5 quarters. So that's what I think there is a growth bonanza here, and I think market will remain. I would think at 18-19 P multiple. I think it looks a good stock, good story to pursue for next 2-3 years.
All right, large transaction there in the renewable energy space for Mahindra & Mahindra. Now, the Prime Minister launched the National Logistics Policy on Saturday, 17th of September, which also happened to be Prime Minister's birthday. Now, this policy seeks a unified approach to logistics in terms of policy, regulation and an overarching common institutional framework as part of the NLP. Now, the Prime Minister also launched ULIP, or the Unified Logistics Interface Platform, which will bring all the digital services related to logistics on one platform. And earlier today, we got in touch with the management of TVS Supply Chain Solutions to really understand how this particular policy was likely to benefit the sector. Let's hear out his comments and the way forward.
It's saving of time, visibility, one documentation, and like I said, maybe we have a unique opportunity for India to become a completely paperless supply chain, because digitally we can link across multi-modes, across service providers, across users. The e-way bill was again a fantastic document, right? Because it enabled logistics service providers be part of the supply chain without having a separate documentation created. Similarly, this now will make multimodal come together and thereby create a single paperless digital solution.
All right, that is some important opinion coming in on the latest national logistics policy. But with that, let's move on and also talk about something else that we're tracking. In its latest fortnightly review of the windfall gains tax, the government has reduced the tax on crude to 10,500 rupees a ton. This is from the earlier 13,300 that we had. The export duty on aviation turbine fuel has also been revised lower to 5 rupees a litre versus the 9 rupees a litre that we had earlier, while the export duties on diesel have been cut to 8.5 rupees versus the 13.5 rupees that we had earlier. Now, sources are also telling CNBC-TV18 that ONGC has requested the government to take the dividend route instead of imposing a windfall gains tax. As you know, the tax has been affecting profits and committed capital expenditure for future projects. So ONGC did see quite a sharp pickup in early trade, but now it is at the low point of the day, seeing a cut of around 1%. So that's something important to track. We're going to get into a short break now, but there's lots more action coming up on the other side. We'll also get you the details of Adani Wilmar as it is set to expand its ready-to-cook range. Welcome back. You're still tuned into Business Lunch. Now, another story we're tracking is that Adani Wilmar is all set to expand its ready-to-cook range. Shilpa is here with all of those details. Shilpa.
Well, Adani Wilmar is looking at growing its food as an FMCG business, and a part of this is an expansion of its ready-to-cook portfolio. Now, currently, it already sells a product called ready-to-cook khichdis, but it's now going to expand that portfolio with a lot of rice-based items. That's where the focus will be, and it is looking to leverage its recent acquisition of Kohinoor that happened in May this year. Now, what we're given to understand is that the company will be launching a do-it-yourself biryani kit this fiscal, and that will be under the Kohinoor brand. And it is also looking at a whole range of other rice-based ready-to-cook products like a Mexican rice, Thai rice, fried rice, and other similar products like that. But this could be either under the Fortune brand or the Kohinoor brand. That the company is yet to decide. And one or two of these products will be launched this fiscal itself, and the rest will soon follow. Now, like I said, currently it has khichdi, which is under six variants under the RTC portfolio. Now, the company is also looking at expanding its breakfast segment also, where it currently sells two variants of poha. It will be looking at more localized variants of ready-to-cook poha and similar breakfast items that it will be soon launching. Back to you.
All right, Shilpa, thanks so much for all those details. Ready to cook will be an exciting opportunity, and probably the market is ready for that. ITC, of course, had been a player in that. Looking at the markets, take a look at that. Some of the counters like Asian Paints, Reliance Industries, ICICI Bank, Maruti Suzuki, and from the consumption basket, Nestle India have gained a slight bit. In fact, some of them which have been not performing well, have been seeing some buying opportunity as market really carries on with the momentum. So Nifty 50, 17,620 levels at this point. Bank Nifty also in line with the key indices movement above 0.5% gain, and mid caps are comfortable in the green, now 0.09% up. Flattish but comfortable in the green. Keep an eye out for all of. All eyes are also on the Fed this week, with the two-day FOMC meet set to get underway tomorrow. But it's not only the Fed, as many as 14 central banks, remember, around the world will be meeting this week to really decide on the monetary policy rates. Reema Tendulkar is right here to tell us what can be expected from central banks, and especially led by FOMC. Reema.
Thanks so much for that. So the global top story this week is going to be what the Fed is going to do and how much it's going to be raising interest rate. But did you know that apart from Fed, there are 14 central bankers around the world who are meeting this week to deliberate a rate hike? The prominent ones include England, Bank of Japan, and these two count among the top 5 big economies of the world. But apart from that, we've also got banks in Switzerland, Norway, Sweden, South Africa, Philippines, Indonesia, Brazil, Taiwan, Egypt, amongst others. That list is very long. On the whole, 15 central bankers are meeting this week. For the Fed, the focus will not just be on the magnitude of rate hike, a 75 or 100 basis points rate hike. The recent CME Fed tool is now forecasting an 18% probability of a 100 basis points rate hike after the red-hot inflation print. But the attention will also be on the dot plot projection, which will indicate where the terminal rates are going to be and how long the Fed will continue to keep rates at these elevated levels. But apart from that, let's tell you what we can expect. Now, Bank of Japan is expected to stay pat like it has been for the last many months. It's been resisting the rising tide of central bankers increasing interest rates. Bank of England could be raising rates anywhere between 50 to 75 basis points when it meets this Thursday. The reason the street is still divided on what the quantum of rate hike will be is because we've got some key data which comes prior to the meeting on Thursday. The July GDP, the August inflation print coming out of UK, and that could sway the MPC over there. Switzerland's central bank is also likely to raise interest rates by 75 to 100 basis points. Did you know that Switzerland is now the only economy in the world where we still have negative interest rates? So once Switzerland raises rates this time, it will end a 7-year experiment with negative interest rates. But the most interesting one will be Turkey. Now, Turkey was one economy where we had a 100 basis points rate cut in the month of August. The question is, what will it do in the month of September? It has been focusing on growth over inflation as tourism has dissipated, but its inflation is running at 80%. That's how high inflation is. So let's see what Turkey does. And finally, Norway and Sweden, they could see interest rates being raised by 75 basis points, according to economists, following the path that ECB took. Well, the moot point is, world around us, central bankers are accelerating their monetary policy normalizations, and investors are pricing in sharper surge in interest rates over the coming months. Back to you.
Reema, very interesting. Thanks a lot for taking us through that entire roundup. So we have 15 central banks which are looking to, announce their policy decision this week. So it's going to be packed. But with that, we're going to get into a short break now. Up next, my colleague Sanjay Suri will get you exclusive updates from Queen Elizabeth II's funeral, which will take place in London today.
Welcome back. You're watching Business Lunch. To an important global development then, Queen Elizabeth II, who was, remember, the world's largest reigning monarch, will be honoured with a full state funeral at Westminster Abbey today. And that's going to be a big event to watch out for. Now, the world leaders from across the world will be bidding her a farewell. And also Indian President Draupadi Murmu is also likely in London to really attend this funeral. In fact, Sanjay Suri, our correspondent from London, sent us this report on that big event.
This is a mark really of the veneration, the reverence for the Queen. It is a triumph for her, a tribute to her, very much more than the tributes in language, in words, from leaders from around the world or from within the country. But more than that, it is also at so many levels a tribute to the very people who have joined the queue the patience, the discipline with which they have stayed in the queue is quite remarkable. At the same time, this is a triumph of management. The way that sections were formed in the queue with a colored wristband for each section to enable people to leave for using the toilet or for refreshments and to rejoin the queue in more or less the same place. This has been extraordinarily well managed, and the people who have joined it have been extraordinary in the sheer discipline with which they have stayed there, and so many have joined. David Beckham, the great football star, joined at 2 in the morning, stayed in the queue for 12 hours. He chatted with those next to him. He posed for some selfies inevitably, but he said it was so important for him to be there. And other celebrities have come, and not to look for fame or photographs. David Beckham doesn't need that kind of publicity. This is an expression of a oneness. All these hours in the queue, day and night, and at night it has been cold. All this just to get a minute or less to file by the Queen's coffin in Westminster Hall.
All right, Sanjay, thanks a lot for bringing us that important update ahead of Queen Elizabeth II's funeral today in London. But with that, we're completely out of time on this edition of Business Lunch. From Nisha, me and the entire team, thank you very much for tuning in. Midcap Radar is up next.